Okay, part two of natural gas. I want to go over quickly again on natural gas. Um, Here is a closing price only of natural gas on the point and figure chart going back to 1999. And what I want to point out here is areas of support and resistance for Sunday night. Here is a volume profile. A lot of volume. Buyers and sellers were happy at 296. So I will take that as a support level for now. Here are my targets for Sunday night. Not a lot of volume there. So I'm going to say that if we get to 308, 311 on Sunday night, that should do the trick. But 296 has to hold. If we get something going by the end of the day, between 321 and 331 should be a level of resistance. And see if I can break this down further. Since natural gas has a 1,000 basis points. Okay, this breaks it down even further. You can see that here. Not really a strong bottom, but there is support underneath it. My target again was up in this area. If by chance we get to there, then we'll discuss that on Tuesday or Wednesday. For natural gas is in a bear market with this red downtrend line, and it is still in a negative market until that line is crossed. Like here, it crossed at $3, and it continued on. This is your support line. This goes back even further. This, if you dig into point and figure, this is called a low pole. We have one at the top, a high pole, and this is a logged or actually percentage chart. And so this is the big picture. Natural gas went up. This is its move. This is a bear move. Or if we want, try and give it a bullish spin to it, we can say that this is a correction of the first wave from the low down here. We could use this possibly as an A, B, C pattern. But until basically get up to here, not much is going to happen. And there's a lot of overhead supply up in here. This is probably where all your funds are short. And I believe natural gas is a cash settled account. I'll look that up. So they don't have to cover, they just let it run. And the computer does its own little figuring out 1% box, a 3 reversal. It has a target of 247, which we saw in the previous video, that if we do take out this low, if we take out the low again, the target would be about 250, 240, somewhere in that area. I believe that's S2. So that's just overall natural gas supply up in here, 380, and some minor overhead supply in this area, and use this area under 3 as we'll say it's a minor support. It's decent size, but it's minor support, and then the next level would be down here. So if we take out the 280 or the whatever 270, it'll probably go to 250. And on the upside, we're 311 at best. I'm looking now for Sunday night. Here's a big picture of natural gas showing you again that the low was 102, set way back here, December of winter 91, 92, and once again it's at $3, so it can only fall to 0. Obviously here, somewhere down in this area, what I'd like to see is have natural gas come through here and just literally swipe all this stuff. And it does. They don't have to physically pull it out of the ground and move it. You could just be on the wrong side of the trade, like in 2012. All right, and then if there's any type of reversal here, this area between 6 and 8 would be the first stopping point, and then down here between 4 and 6. So if natural gas does close over, say 390, I think that's the average for this whole period, 390, Then you want to look favorable that it trades between 4 and 6, and then up here between 6 and 8. Can natural gas go up in the summertime? Sure, just as much as it can go down in the wintertime. Here is wintertime. Wintertime. Here's into winter. Here's into the summer and peaking in October. Here it is as a wintertime. Here it is the winter. This is a year of a drought. FYI, if you have a drought, the following year typically is dry and cold. This is the people coming after this thinking that it's going to happen, and the next couple of years it did do diddly, and it broke out again here. I'm not sure what was going on there, but I'm sure it was the hedge funds finding a new thing to play, and came crashing a round trip all the way back down. And then commodities were the thing. We rolled out of NASDAQ stocks and rolled into commodities because they were cheap. Greed works that way. Yeah, if natural gas gets down here again, what do I want to do? I want to buy. And it had its run a couple of times, cratered, came back down, and now we're here. And basically, I look at this as a 4-cent sideways area. There is a school of thought that you can take this channel and add it to this channel, and once this breaks out here at $6, the target then would be 10. Because you take the 4 here and add it to the top here. That's basically it for that. Every week the United States government comes out, or approximately every week, comes out with the commitment of traders report. This would be the poker hand of the players. Wouldn't you like to know what everybody is doing? So in here, this comes from Scotiabank of Canada. I use them because, one, they're not American, so if they do have any type of bias, it's going to be a Canadian bias. So let's see here, natural gas. So here's natural gas. Beginning of the year, the red is the price, and as the price goes down, this is your net. This would be your hedge funds adding to their shorts. What I think is kind of interesting here is here's a hook through the price, and as you saw here, here's was a hook through the price, and then natural gas got a bounce. So here, basically, as prices are falling now, they're beginning to lighten their short position. But it's been a long time since the funds were long. This chart here from Finviz shows on a weekly natural gas. It shows the green is the commercial hedgers. This should be the people that are pulling it out of the ground, and your banks. That can actually, the people pulling out of the ground would be they should be on the short side, because that's how futures work. If you pull it out of the ground, you short it. If you use it, make aluminum, then you want to be long. Banks typically are short because they're fixing their risk. So here you see the red is the large traders. These are the professional speculators. If you start moving hundreds of contracts, you're definitely going to have some push on prices. And as you can see, they were all short all through in here, and it worked out swell for them. They never did go long, which is another indication down the road, though, that once they turn, it's going to be the first time in 6 years, 10 years that they actually went long. You can see certain areas like here where they're really wide. Here where they were really wide, and you had a move here. Here was another area where they adjusted as prices moved, and now the hedge funds, they are pretty well massively short. The last time they were this short, we did get a little bounce, and it basically looks like 15%. So off the low from $3, it'd be about $3.45. And that's up in that area again, and I showed you where there's some resistance in that 350, 360 area. But like I said, markets have basically been going sideways for 6 years. Here's your inverted head and shoulders. This, of course, is your neckline, but of course most of you don't want to wait to $6. So at best, you might as well just wait till at least 350 and then 450, and then we're off to the races again. but basically being a sideways channel, buy opportunity, buy opportunity, buy opportunity. That's how I look at it. Even though I may want natural gas to come all the way down to here because of greed, you know, try to make it free that I can buy, I'm bullish. I'm not going with the trend. I'm not trying to collect this here. I'm trying to collect this and way up in here. Eventually it will. Prices will get so low that they just bore everybody to death, and then that's when the base building accumulation comes in. And that's it for this one. Good luck on Sunday.